This video is sponsored by Moomoo. If you are a regular viewer of my channel, then you know that I do not accept sponsors very often. And when I do, I make sure the business resonates with my channel and adds value to my audience. So in today's video, I want to share with you why I think Moomoo is a unique brokerage and how they can help investors save money. Moomoo is a free brokerage app with over 23 million users around the world. It is also currently ranked as the 8th best brokerage on Wikistock, which scores over 11,000 global brokerages. Moomoo has been incredibly successful building its brand in Southeast Asia, with 1/3 of Singapore's population on the app now, and now Moomoo is leveraging its successes to add value to the North American markets as well. Moomoo's mission is to make investing a viable option for people to achieve their financial goals. They achieve this through providing affordable investing, currency converting, and tooling for all of their users. For example, the number one way that I save money using Moomoo is by leveraging their low conversion fees. Moomoo has the lowest conversion fees I have ever seen, and they're significantly lower than a bank or a other brokerage. For example, you can see here that if I want to convert $10,000 of Canadian currency into US currency, then I will only be paying $11.71 in conversion fees, which is a 0.12% conversion fee, and I will receive $7,372 US. This is even cheaper than using Norbert's Gambit with a bank like TD, because the trading costs alone would be around $25, and you will have to wait a few days for your trades to go through and for the conversion to actually happen. So Moomoo quite literally offers the cheapest and fastest way to convert currency between Canadian and US dollars. So if you are a Canadian investor who likes buying US stocks, or if you're a US investor who likes buying Canadian stocks, then consider looking into Moomoo, because they have the lowest conversion fees I have been able to find, and you could save a lot of money by using them too. The other super unique thing about Moomoo is they allowed you to trade Canadian stocks pre and post market hours. I haven't seen any other brokerage that allows for pre and post market trading in Canada, but Moomoo has it. This can give investors an advantage by being able to buy and sell Canadian stocks when many other investors can't. How many times have you read through an earnings report and had to wait until the following morning to buy more shares? Well, with Moomoo, now you can buy before nearly everyone else can and get your shares before the market opens. To summarize the main unique value propositions of Moomoo that I haven't seen any other brokers beat are the low currency conversion fees and the pre and post market trading of Canadian stocks. Now, additionally, Moomoo has a lot of other features for investors to dive into, like free Morningstar research. Morningstar is a $200 per year subscription that Moomoo offers for free on their app to all of their users. So if you are someone who uses Morningstar, then you could actually save $200 per year simply by downloading Moomoo, which again is a free app. Now let's take a look at what Morningstar analysts have to say about Google in specific. Morningstar analysts are currently giving Google a $209 price target and explain that this is based on a 27 times earnings multiple for Google. They also expect the company's revenue to continue growing at a compounded annual growth rate of 10% over the next 5 years. Morningstar also says that Google's moat is wide due to its intangible assets, like the Google name, and its network effects. They even break down the moat and competitive advantage of Google's different business segments. For example, here we can see that YouTube has a wide moat rating due to it being a streaming giant. The platform has more than 2 billion monthly users and 1 billion hours of content viewed daily on TV alone, which is pretty insane. YouTube Music and Premium also have over 100 million subscribers now, and that number is continuing to grow. Morningstar even has a capital allocation rating, and they give Google an exemplary score. This is because Google has a very strong balance sheet with more than $110 billion in cash and only $13 billion in debt. This means that Google could wipe out all of its debt with its existing cash position and still have $97 billion left over. Google has also acquired some incredible businesses over the years, such as YouTube, Fitbit, and Android. In fact, YouTube is said to have been one of the best acquisitions of all time. So Google does have a history of strong capital allocation, especially when they are acquiring other businesses. Lastly, Morningstar shows us what the bears and the bulls are saying, which gives both perspectives on the stock for investors to consider and ultimately helps you make better investment decisions. Bulls are currently saying that Google's core business is deeply entrenched in advertising budgets. The business is highly profitable, and that Google Cloud is a huge opportunity for continued growth. However, bears are currently saying that Google is heavily reliant on search, despite the business trying to diversify. Google hasn't been able to successfully generate cash flows from its other bets like Waymo, and that regulators are cracking down hard on the company now, as I'm sure we have all seen recently in the news. So you can clearly see what the goods and the bads are with a company, which helps you form a better investment decision. Moomoo also offers an in-depth earnings hub, which helps you keep track of stock earnings reports and quickly see if the businesses beat or missed analyst earnings estimates. Moomoo even has their own AI summaries of earnings results and transcripts. This helps you get a quick but in-depth summary of all the key highlights that investors need to know about a company's earnings report. For example, here we can see that Amazon reported $25.3 billion in operating cash flow in the most recent quarter, which was up from $16.5 billion in the prior year. Revenue also increased by 10%, and AWS revenue grew by 19%. However, the company has also said that it is expecting to increase AI investments throughout the remainder of the year, which could harm future cash flows. Amazon also gave guidance of sales between $154 and $158 billion for the next quarter, which is a growth rate of 8% year over year. Now, as you can see, I got all of this information in one summary by using Moomoo's AI. Another thing that I love is that Moomoo has the earnings call questions and answers. So if you're wanting to see the questions that analysts and investors asked on the conference call, then you can easily find them on the Moomoo app. But if you also want to listen to the whole earnings call, then you can also find that on the app as well. In the Earnings Hub, you can also find images from the company's earnings. For example, we can see that Amazon's North America operating margin is currently sitting at 5.8%, and its international retail operating margin is now positive at 2.8% and is clearly trending up. AWS's operating margin also hit an all-time high in the most recent quarter at 37.6%, and its revenue growth has started to re-accelerate to 17.2%. So AWS is seeing increased growth and profitability. AWS is still the market leader in cloud as well, with a 31% market share. Azure is at 25%, and Google Cloud is at 11% now. In terms of competitor growth, AWS is seeing a strong rebound in overall revenue growth, while Microsoft Azure is seeing flat growth rates, and Google Cloud is also seeing accelerated growth. So in the most recent quarter, AWS and Google Cloud seem like they had the strongest earnings releases. All of these earnings slides and images were created by Moomoo and offer a great overview of the company's earnings against its competitors. Moomoo is also currently offering welcome bonuses and transfer bonuses. For example, they have a 6% cash rebate on any deposit amount and a $50 cash coupon on a $100 deposit, which is basically a 50% return. Then they have cash rewards depending on the amount of money you transfer in to your Moomoo account, all the way up to $2,300 in cash rewards. Lastly, my audience also gets a 90-day commission rebate card versus the typical 60 days. So by being a viewer of my channel, you essentially will get 90 days of commission-free trades. Your money is also secure, as Moomoo is a member of the CIPF, which protects investments all the way up to $1 million. So if you would like to check out Moomoo and take advantage of the welcome offerings and get all of the free features that I have discussed at length in this video, then click the link in my description. And again, Moomoo is a totally free app to download and try out. And thank you again to Moomoo for sponsoring today's video and supporting my channel. It's sponsors like this that really help me continue to make content and actually fund the channel. So seriously, thank you again to Moomoo for supporting my channel. And you guys, go and download their app because it's completely free and it will also help out my channel. But with all that being said, if you did enjoy the video, then please remember to leave a like on it. And if you want to stick around and see more stock market and investing content, then consider subscribing to my channel as well. But that's going to wrap up the video for today, everyone. So as always, thank you so much for tuning in, and I really hope to see you all again in my next video.